So what I want to show you here, for many people you don't understand the candlesticks, the way it works, I'll take this big one because it's simple. You see the bar at the bottom is the open, and at the top it's the close. And this here is the price to what actually the highest price it went to, but then it retraced a little bit. Okay, and if we take a red bar, let's take this one. That's the first bar. Actually, that's where it opened. Sorry, and then it closed at this level right here. You always see the color. If it's green, it's because it closed higher than it opened. If it's red, it's because it closed lower than it opened. And that gives a very big indication. You can find just by looking at the picture if there's a big buying pressure or selling pressure. And that's something that when you start scanning stocks every day, you basically get a very good feel for if there's a big selling pressure or buying pressure in a stock. And when you don't see much color, basically it's indecision. You know, nobody won that fight, because you can look at it as a fight between the bull and the bear every day. And that one, definitely the bull have won. That one as well. That one as well. This was even, but then the next day it came very strong and the bull won. So this is a picture of buyer. You can count the number of bar that are green versus the number of bar that are red, and you can pretty quickly see what's happening there. I want to show you this one. That's a good example of selling, and you see, you know, basically who won and who lost. You can see 22 red bars starting from this right here. We don't need it's pretty much equal, but let's start right here, and you can count 22 red bar versus 9 green. So you definitely have more sellers pushing the stock down than you have buyers pushing it up, right? So that's one thing that confirmed the help you get from using candlestick, basically. Here I will show you an example. Okay, I want you to understand now the change of momentum. Now that I have covered the candlesticks, you know, just in a nutshell, and in the boot camp we will cover probably more like half an hour on the candlestick, because there's much more to cover. But at least that one on this DVD you can get good understanding, so you can start. So let's start with this right here. Day 1, 1, 2, 3, 4, 5, actually 6 days, where every day you have a lower high, basically. If you look at each of these points, you know, the high is always lower. And what that means, and if you include that one, it's 7, but it's pretty tight. What that means is the bull are never able to put enough buying into the stock to bring it, you know, at a higher high, to bring it to a higher high, and then reverse the trend. And that's something I use a lot, you know, when I track stock and scan at night or in the morning, just before the market open. But I do most of my scanning at night, by the way. But I write the newsletter in the morning. So right here, you can see that we reverse, because at this point, you know, the day open and it was higher than the last 3 days. That's very bullish. That's a good sign. Good volume while doing it. And then we came back. You know, you can get in a move like this, or you can wait for a pullback and see it firm up, and that's what we do most of the time. And then you can see that just as it come, and right here again, it make a new high. That's a very safe entry just on a pullback. You get that as your entry, and we'll cover that later in this free DVD, the exact entry and exit setup. But you can see basically the change of momentum happening, and with experience you get a good feeling of, you know, if there's a lot of buying or a lot of selling coming. One thing as well that we use is the number of successive bars in the same direction. When you have more, you know, there's a pattern that get established from 3 to 5 in one direction, and then after that you have to look for a reversal. It can go as far as 8, and in a very, very bearish market or very, very bullish market, I've seen it as far as 13. But what happened is around 4, 5, you know, you should be ready for something different to happen. And then when you get at 10, 11, or 12, you know, or 13, and don't get me wrong, it can happen. It can go further than that in terms of the number, the sequence. But normally, you know, 3 to 5 is a momentum that get established. So here we have 1, 2, 3, 4, 5, and then right away you have a change in momentum. Here we had 1, 2, 3, 4, 5, 6, 7. It's stabilizing. We can see it, and then right away it changed direction. Okay, on that one. That's something I already had shown you. You can see the support as well on this, where you have this as a good base and then it never come back close to it. So that's a very good sign. So when you enter right here, that gives you much more confidence to do it. So right now, let's look at a chart, that Zag incorporated. That's a stock that I've been climbing for a while, and actually it's a subscriber that sent it to me. I've never been involved in it. I never, bought it because I got it too late. But this one is moving very nice. So basically, you can see. I'll start from right here. Okay, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bar. Where you have this move, and probably more like 11, 12. 1, 2, 3, 4, 5, 6 days, where you have lower I. But right here, you can see that it, it did retrace to the upside, and that's good. So something is about to happen. And right here, we take the previous I, and then 1, 2, 3, 4, 5, 6, 7 days, in this move. Where you have an upside, and then as we discussed, you've got a little bit of a slowdown on that day. It went high and then it retraced on this doji, then the next day came down, but you know what, it seems to stabilize. Continue, that's fine. But let's look at this, where you have very, very tight range bar, and you can look at it as a pause, or it's not necessarily, it's not a pullback, it's more of like a pause, the way you look at it. 1, 2, 3, 4, 5, 6, 7, 8, 9. Something is about to happen, and then right on the moving average, that's when this thing happened, this move happened. We'll cover the moving average later. So again, that change, 1, 2, 3, 4, 5, 6, 7, 8, 9, and you know what? It's about to pull back a bit. So that's something that that helped me trade a lot. I just wanted to show it, a bit more clearly, so you have a good idea of it. So I think for this part, the first part is done at this point.